Be Wealthy and Smart, episode 934.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about, will the stock market crash? Because this is all over the internet. Everyone is saying the stock market is going to crash. This is a disaster. It's a Lehman moment. All of this negativity. So I'm going to look at, do I agree with that or not, and why? First of all, unfortunately, the way that social media is set up is that sometimes by being dramatic or having dramatic titles, they can get more viewership or listenership. And so sometimes there is a tendency to pile on to a dramatic topic or to get an emotional response out of people. A lot of times there's either super great news or super terrible news, and that's just the way it goes for people to get ratings. But here's the thing. I've always thought you have to be offering value. You have to be telling people something that comes from a place of research, not from a place of what everybody is saying and regurgitating what everybody else is saying. Because I've been in the investment industry for over 25 years, I have a perspective, I have a viewpoint. And if you've been following me for any period of time, especially when the pandemic happened, you know that I led you through that with accuracy. And that's what I want to do here again today, is give you a viewpoint, my viewpoint of the future with accuracy. I recommend that you have go-to sources that you trust, people that have a good track record. If people have been fear-mongering for years and years and years, which I have been listening to people who have been like that, it's not accurate and it's not someone that you can really follow for your investments. You have to follow people that have accuracy. Nobody can be accurate 100% of the time. That's not realistic. But if people really give you good direction and really have a good understanding of what's going on and have a propensity to be right, then that's someone you should pay attention to. So you need to have your sources. You need to have your financial experts who are your go-to people in times of crisis when the stock market starts to sell off and you get scared. Now, we've all heard a lot about Evergrande, this Chinese company that is very highly levered, has a lot of debt in China, mostly because of real estate. And it is similar to what happened to Lehman Brothers here in the US around 2008 and 9 during our financial crisis here. But the reason that it's very different in China is because the banks are state-owned. That means that basically the government owns the banks, and if the banks go down, they can always create more money, and they can do things to help that bank in a way that you can't do in the private sector. So in that way, it's a completely different situation than a Lehman moment. Now, could the company go down? Absolutely. Is that bad news for China? Absolutely. Does that necessarily mean it's going to spill over into the United States? Well, we do see there is ownership in Evergrande by BlackRock, Vanguard, and some other U.S. companies. But they actually bought more as Evergrande had problems Monday. So obviously, they're not too worried if they're doubling down on their investment. So that's just an interesting point to pay attention to. Another thing is people tend to be very bearish right now. That means people are full of fear. And when we look at the stock market sentiment indicator, it's very much more on the fear side than it is on the greed side. Now, almost every single bubble or crash that I've been through starts from a point of the greed side. It starts from a point of extreme greed, to be exact. It does not start from an extreme fear perspective. So the fact that we are in extreme fear is actually a contrarian indicator. That means that it's actually bullish. And that means that I am saying I think the stock market after this dip is going to resume its upward trend. If you remember, during the pandemic crash, I was very bullish and positive for the whole year when a lot of people were saying it was like the Great Depression, we're going into a depression, we're never coming out of this. I said, hogwash, we're not going to be able to have any comparison against profits, and that's going to give us a free pass for the stock market to move higher. And in fact, that's what we saw. Also, I had silver as one of my favorite recommendations, and it turned out that silver was the number one performer last year. So that proved to be right on track. Now, silver has pulled back, as have the miners, but I'm not worried at all because I totally expect that later this year, we're going to see much higher prices. And I'm saying to the tune of around 50% higher in silver prices by the end of this year. I think silver's become way oversold, and partly that's because it is heavily shorted by the banks who don't want silver and gold to compete with their currency, the fiat dollar. But silver is needed for electric vehicles. It's needed for solar panels, cell phones. It's needed for a lot of the technology that we have and more technology that's developing. As electric vehicles come more into vogue and popularity, silver is going to be more and more necessary, and it's much rarer than gold. So silver all the way around should have a much higher valuation. That's one of the reasons why I've talked on the podcast for years about having physical silver. I truly believe that someday soon, maybe months away, the price of silver will start to get closer to what its true value should be. But for now, silver remains 60% below its all-time high. And where else can you buy something at a 60% off sale? So where do I think we're going from here? Well, number one, I don't think we're going to have a stock market crash. We haven't seen much more than a 2% pullback this year, not even that. And so we were desperately in need of a bigger pullback, a sharper correction. That is something that's necessary and needed, and one of the reasons why you're able to get double-digit returns when you invest in stocks rather than low single-digit returns or under 1% returns in a safe savings account. For taking this extra risk of volatility and holding on through the fear and the scariness of that volatility, that's why you're able to get higher rates of return. But no, I do not see a stock market crash this year. Number two, I think cryptocurrencies will go higher, but I still think we're going to have a very sharp pullback in cryptocurrencies. That's going to give you some great entry points and buying opportunities to buy low. Again, buying them on sale. We know that cryptocurrencies are more volatile than stocks even, but that's because they're also volatile on the upside. The rates of return on cryptocurrencies are astounding, and that means that they can compound your money faster. So at least a 5% allocation in cryptocurrencies, I think, makes tremendous sense. And that's what I'm going to be talking about in my book that's coming out in a few weeks. So cryptocurrencies, yes, will have a very dramatic pullback, so save some cash on the sidelines for that. Or if you haven't invested yet, that might be a good time to be getting in. But after that, I think cryptocurrencies will rise dramatically, and we have 5 years ahead of us of incredible cryptocurrency returns, which will create a lot of wealth for people. Number three, I think metals will be higher by 50% by the end of this year. My target for silver is $38 by the end of the year, if not higher. And I think the mining stocks have been decimated this year and are really oversold. So this is a great time to add more to your gold mining stocks, silver mining stocks, junior mining stocks, whatever you own. This is a great time to average down, put more money to work, and buy them on sale. Number four, I do not believe there's going to be a real estate crash this year. I've been following this all year long on the podcast saying, well, I think we will have a bit of a slowdown. I don't think we're going to have a crash this year in real estate. Why? Because interest rates are remaining low, which will help to support the real estate market. And yes, forbearance is ending and we are going to have some more supply coming on, but it's very gradual. It's not something that should add a huge supply of homes. So no, I don't see a real estate crash this year either. Number 5, I don't see any Fed tapering this year. The Federal Reserve has talked about tapering their bond purchases in order to get ready to start raising rates. I just don't see that they can do that yet, and so I'm not anticipating that rates are going to have a dramatic move at this time. Number 6, I think the stock market correction that is underway is going to be about a 10% correction. We just completed about a 2% drop on Monday, so we have 8% more to go. I don't think we're done yet. I think it's going to take a week or two to play out, maybe into early October. But we will get through this correction and then stocks will regain their bullish trend and move higher. So in summary, I think this pullback in stocks is creating an amazing opportunity to buy when we see the bottom. Again, it's not yet. This is early. We have farther down to go. And it's going to get scarier. But I think in early October, we will see the bottom and we will be able to have some very good buys in stocks at that time. And then the market will move higher. I also think, again, we're going to have that downturn in cryptocurrency, and that's going to give us an even bigger opportunity for our 8 cryptocurrencies that we own in the VIP experience. So we're very excited to be able to buy our cryptos on sale, and we know that these are the ones that are long-term winners and have already been planned for in the banking system for many, many years. Banks cannot do anything on a whim. They have to plan many years in advance, particularly when you're talking about currency and money. These are things that are going to come into being with central bank digital currencies. All countries are going to have a digital version of their currency, and they're coming soon. China likely will be the first major country to move in that direction. So we're seeing major opportunity in both stocks and cryptocurrencies going forward. So use any pullbacks as a buying opportunity. That's my opinion after looking at all the evidence out there and gathering all the research and all the data points that I look at. That's what I see. So while fear is high, again, it's telling us that's a contrary indicator, and the stock market is providing a good buying point, and cryptocurrencies even more so. I have an exciting announcement to make, and that is that Be Wealthy and Smart has now been added to Alexa. So if you use Amazon Alexa, you can ask her to play Be Wealthy and Smart podcast, and it will play. So that's really great. Also, since we've been talking about my book a little bit and about cryptocurrency, I want to reveal to you today the title of my book, which is 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies, or How a Little Money Can Grow into Crazy Wealth. I don't have a publication date yet, but it looks like it will be coming out sometime in October, and I'll be sure to give you the specific dates as soon as it's going to be available. So stay tuned, and I'll keep you informed on that. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.